Okay, so today we're joined by Richard Collier-Keywood. Thanks very much, Richard, for joining us. Really do appreciate it. As you know, us at Zync Digital, we're a digital marketing agency for credit unions and social enterprises. And as you'll find out shortly, Richard's the perfect person to speak to, given his position across both of those two sectors. Richard, would you mind just introducing yourself and your background for us, please?
Yeah, no, good morning, Anthony, and good morning, the rest of the team at Zync. So I'm Richard Collier-Keywood, and I chair both Fair for All Finance and the School for Social Entrepreneurs. Before that, I've done a mixed career of working for a large accounting firm, but also working a bit in a policy role for government as well.
Excellent, fantastic. So Richard, we've just got a few questions that I think will really help us to think about both the social enterprise and community finance sectors. So I'll hand over to Holly and Andrea for those. That's okay.
Cool. So hi Richard. My first question for you is sort of, when did you first become aware of social enterprises, and what sort of inspired you and encouraged you to get involved with them?
Yeah, thanks, Holly. So I think my first involvement with social enterprises came probably in the early 2000s, when there started to be, I think, a movement of purpose-led businesses. Mm-hmm. And in a broader sense, it seemed to me to be a really good thing that suddenly business is not just focused on shareholder profits, but it's focused on delivering a lot of other things to other stakeholders, so communities, employees, etc., etc. And I think out of that grew, I think I was so impressed by many leaders of purpose-led businesses, particularly really the people who were leading a business maybe just for themselves or one or two other people, who were very passionate about trying to create social change, and they were just doing it through a business model rather than a charity model, perhaps. And it seemed to me that was a fantastic movement to support.
Cool.
Yeah, we can see that you're involved with various projects. So what has changed about the social enterprise since you started?
So I think what I've tried to do is to bring more and more resources into the social enterprise sector, to make it more mainstream, if you will, to challenge existing businesses as to what their purpose is through them looking at some incredibly passionate business leaders. It's very infectious if you meet someone who is incredibly passionate about creating social change through a business model, and if you introduce them more widely, it's funny how many business leaders really then think about how they're trying to influence stakeholders. So trying to bring more resources into the sector, I think trying to use them as a model and as a challenge to create a wider movement of purpose-led businesses.
Thank you.
What do you think, Richard, makes social enterprises different, and what do you think that organisations like the School for Social Entrepreneurs do to help them?
Yeah, so I think what makes social enterprises different is that they have a passion and a purpose that's beyond profit. So they're doing something else. They're targeting some element of social change or some element of social injustice, and they're changing that largely through a business model. The challenge is often that the market they're trying to influence is not a strong market. So they have to find proxy markets, they have to find other people to pay for what they're doing, or they have to find some element of subsidy to make those markets work. And what's amazing is the people involved have often got personal lived experience, if you will, of the issue that they're trying to change. And that makes them, one, very authentic, but two, very good at it because they've actually been through it themselves. And then you come to SSE, and I think what SSE does really well is it takes people like that, it pulls them together into learning cohorts, so groups of 10, 12 people, and helps them learn together with the benefit of bringing more people into the room who've had experience of particular issues that they're facing. It could be, how do you market to this group of people? How do you, manage cash flow? What does it mean to run in a business structure? How can you increase your traded income? Whatever the area that social entrepreneur is facing, there's probably someone else who's faced that issue before. And so we bring people into the room who can tell stories about how they've overcome some of those issues and been actually both successful in that sometimes, but also sometimes unsuccessful. There's a lot to be learned from where other people haven't got it right the first time. So SSE brings those people together, and we train hundreds of social entrepreneurs a year and create the networks and relationships and skills in them that really helps their social enterprise flourish.
Should they try to be a social enterprise? If so, how can they do that?
I think the challenge for businesses which are not set up as social enterprises is to manage a wider group of stakeholders. Mm-hmm. And today you do have obligations as a business leader to think about a broader community of interest, not just that of your shareholders. And a lot of the time, quite frankly, thinking about that wider body of interest is actually helpful to your shareholders, shareholder return. If you have more engaged employees because they love what you're doing, if you have a more engaged community around you because they respect what you're doing and you give back to them, then there are benefits to the core business, if you will. So I think there's a great deal of synergy that can be had from thinking about a wider group of stakeholders if you're a business leader.
Okay, and our final question about social enterprises for you, Richard, is that do you think there's anything that social enterprises as a sector could do to improve?
Yeah, I think. Do you mean, Holly? Can I just clarify? Do you mean if the social enterprise sector got more together, or do you mean is there things that could be done from a policy perspective that would help the social enterprise sector? So is it self-help or is it help from outside?
I think sort of as a sector as a whole, what can they do to sort of improve, I guess, awareness around themselves and just sort of getting themselves out there and improve themselves as organisations, I guess.
Yeah. Okay. So I think they already do a very significant amount and a lot more than was happening a few years ago. I think Social Enterprise UK does a great job as a trade association for that sector, and there's some big training institutions, the School for Social Entrepreneurs being one of them, which do get a lot more profile for the social entrepreneurs that go through those schools. What more could they do? I think first of all, working actually on problems together would be helpful. I mean, there are lots of social entrepreneurs working on largely the same problems. I think if there was a way that we could bring them together and be more problem focused in, bringing 7 people together who are working on the same problem, they'll probably learn a lot from each other, and they'll probably also get a greater degree of awareness in the broader community that that's an issue that a number of people are working on. So I think more collaboration between people in the sector will undoubtedly be helpful. And I think the second thing is it would be good if the sector could come together to think a little bit more about some of the key policy changes that might help, and also what they might need as a sector to grow even more. And I think some of those things are about the availability of more startup finance for the sector. There are grants available, often quite small grants, but they can make a big difference if you're starting a business. But then how do you get the first wave of either equity or loan capital in? I mean, that's a lot harder to do if you're a social enterprise. So I think people coming together and working through how that could be done in a more systemic way, in a way that probably recognises also that they're not going to make the same degree of financial return necessarily as if they just focus on a pure business model, there is an impact return that they make. And I think if we can increasingly focus on that impact return as a blended return with the financial return, then as a sector we could attract more capital and therefore do a lot more in terms of social change.
Really good points. Thank you.
Yeah, I mean, I can agree with everything you've said, to be honest, Richard. I mean,
well, that's a relief.
Yeah, in terms of social entrepreneurship and stuff like that, I've totally benefited from everything you've said. You know, I'm a fellow from the SSE, and that kind of that kinship and that, shared learning, specifically as you touched on failures as much as successes. I think that's definitely took our business from one level to another. So absolutely, totally understand and agree with what you've said. I think, in terms of embodying that kind of, social enterprise identity, I think credit unions, community banks and CDFIs, they are very much, they live and breathe those values really for the communities in which they serve. But just in terms of your role with Fair for All, could you just tell us a bit more about who they are and why they exist for us?
Yeah. So with Fair for All Finance, I mean, we exist to promote financial inclusion, largely focused actually on England, because that's the way that the funding from dormant assets works. But we also do collaborate with Wales, Scotland and Northern Ireland as well.
Excellent.
Okay, so recently the government announced over 800 million in dormant assets would be distributed. So in your opinion, how could community and ethical finance benefit from the use of these funds?
Yeah, thanks. So, I mean, 800 million sounds a lot of money, but actually we calculate from a Fair for All Finance perspective that the gap in the market between the amount of available credit and the amount of credit that's needed by people in vulnerable circumstances who can't borrow it from mainstream banks may be as high as 3 billion. So in that, 800 million sounds a lot of money, but in reality, when you're trying to plug such a major gap, it's a relatively small, well, it's a significant drop in the ocean. But it's sort of just want to put it in context. CDFIs and credit unions do a fantastic job of filling some of that gap, and one of the roles of Fair for All Finance is to channel some of that money to organisations that are prepared to scale up to meet some of that gap, and we do it through channeling equity and also debt finance to those organisations. And at the moment, we're working with Treasury on a programme of piloting no interest rate loans. So obviously, it does what it says on the tin. The people borrow money, they don't get charged interest on it, but it enables them to, where they've got a irregular degree of income or irregular expenditure, to match their income with their expenditure over a longer period of time by borrowing some money and then paying that money back without interest. And we're about to embark on a program of supporting consolidation loans, giving people, again, the opportunity to hopefully reduce their interest rates on the loan, and to spread that loan over a longer period of time, so enabling them to reduce the amount they have to repay, and to support that program with a number of credit unions and CDFIs.
Richard, just I mean, something that we kind of come into all the time is, obviously, as you know, when a lot of our clients are in the credit union sector, and whenever when we talk to people about what we do, quite often a lot of people don't know the faintest thing about what a credit union or a CDFI or a community bank is. I mean, how would you describe one then to somebody who had no prior knowledge of what they are?
Yeah, so a credit union is an organisation that really exists for the benefit of its members. They put money on deposit with the credit union and hopefully receive a good market-based return, but also possibly critically, they're able to borrow money from that credit union at a rate of interest that's fair and affordable and is actually capped by legislation at just over 42% a year. and they support their members with products which are right for them and right for the lives that they live. And oftentimes those products just do not exist within the traditional financial services sector, or they can't access them because of thin or difficult credit files.
Excellent.
So what would you say is the biggest challenge facing credit unions at the moment?
I think one of the biggest challenges is actually working out. I mean, credit unions lend across a whole variety of people. Some actually people who could go to more traditional or to the more traditional financial services sector in terms of banking, but they also lend to vulnerable individuals as well, and often they have a mixed model which enables them to lend to more vulnerable people and to, if you like, spread that risk amongst a broader group of their members. I think some of the challenges today would be, first of all, with all the changes in the current interest rate movement in the UK, it's quite challenging to work out, the degree of security that they might have with many of their members. I mean, many people today are facing an almost unprecedented cost of living crisis. They basically may not be able to afford to pay for heating, food combined, and therefore if you're trying to get a loan, it's very difficult for people to look at past incomes, because there might be a guide to future incomes, and look at past expenditure, and there might not be a guide to future expenditure. When inflation is running at 10%, when people are concerned about perhaps failing employment prospects in this country, there's a lot of things that could change to create a lot more risk, if you will, in the credit union sector and the people they're sort of providing services to. So I think risk would be one big thing. I think the second thing would be that they have to get deposits in to be able to lend. It's kind of how it works. And I think pricing some of those deposits against a ever rising interest rate market must also be fairly tricky to maintain their capital to be able to carry out the business and provide services to their members.
So with that in mind then, Richard, what would you say is that the key distinction between credit unions, CDFIs, between, say, high street banks, for example? Is that what you say the key distinction would be?
So I think the key distinction between credit unions and high street banks, I mean, there are probably many ways you could look at that, but I think the main one is that credit unions exist for the benefits of the members, and they really focus very strongly on trying to provide services that are appropriate for their members. There are no outside shareholders that benefit from any profits or surpluses that are made. All those profits and surpluses go back to the members who make up that credit union, and that mutuality model is a very powerful model that should enable risk to be shared amongst the group of members, that should enable a better overall provision of services, more appropriate provision to that group of members.
So I guess our last question would be, how would you say the current cost of living crisis is going to affect the economy in the next 12 months? It's quite a broad question, but just whatever your opinion would be.
Okay, that's a very, very big question. So I'll have a go. Well, I think the starting point for that is obviously the cost of living crisis will impact different people differently, and it will probably impact the people who are the most vulnerable the most. And if you think about your costs are basically going to go up by 10% plus over the course of next year, you're going to be worried about food prices, you're going to be worried about utility bills, heating, etc. That really puts a dampener on anything else you might spend. So the reality is you've got inflation running in the background at 10%. You've probably got quite a big group of consumers who are going to be increasingly cautious about what they spend money on, and any discretionary spend they may choose to save, because you save for a rainy day, and they may have a perception that rainy days are here and they need to start saving more. So all that will reduce demand in the economy, and that's probably helpful to maybe to deal with inflation a bit, but it probably won't help a lot of smaller and more vulnerable businesses who are very vulnerable to even relatively small changes in demand. So I think the concern is that the current environment and the cost of living crisis spirals out of being something of concern just for individuals and goes into the business sector, reduces demand, and may lead to businesses sort of pulling back investment because it's uncertain at the moment. The degree of demand that they're going to get for their business will be reduced, and that could lead to businesses, as I say, delaying investments they might make, and even reducing people who work for them, which again puts a further spiral into it with more people becoming unemployed. So that's the spiral that we've got to avoid. And probably one of the big ways of doing that is making sure that the government encourages people to spend money in the right way, and the government itself spends money on on investments that actually mean that more money flows in economies. I think individuals can help here too by actually spending money more locally, spending money with businesses that they know are vulnerable in their local communities. I live in a very small village, and I know if I don't spend money in the village shop every week, then that village shop is going to eventually it'll have to close, right? And if we want it there, it's essential prerequisite for some of the older people in the village. You've got to spend money locally. You've got to support your local businesses with what money you can afford to spend.
Excellent. Brilliant. Well, I think we've got lots of interesting insights there. Richard, just really do appreciate it. Your time and your experience, given your position across kind of both those sectors has been invaluable to us. I'm sure lots of people will enjoy those insights as well. So yeah, thank you very, very much for your time, I suppose. Thank you.
Pleasure.
Cheers.
Great to see you all.
Excellent. Take care, Richard.
All right. Bye-bye now.
Bye bye.